That was the market perspective on a rapidly changing world. Thank you so much for that, Roelof. But I think to really understand where we are right now, we need a few different vantage points. So that's why I brought more company. I brought Jesper Møller Sørensen, who is Denmark's ambassador to the US, and I brought Elena Scaltritti, who is the CEO of Topsoe. Please give them a warm welcome. And you've said yes to join us today to give us a global perspective from your three different perspectives. So I'm eager to hear where you are. What are you doing, guys? What are you up to? But I think I'll make it a bit more specific, as we know what the two of you are up to. Elena, of course, I'm hinting to Topsoe being right in the middle of energy and industry and the green transition, and your recent announcement that you have to restructure and close a plant and scale down on power to X. So where do you feel right now that the markets and the geopolitical scene is moving your business?
Of course. First of all, you hear me? Yes. Thank you for having me here. And a bit like you, sorry, my Danish is laughable, even after 4 years in the country that I enjoy much. So it will be in English. Yes, we had an important announcement this Monday, and I'm 2 months in the job, so I would say no lack of fun and no lack of working hours. As I stepped into the role, global uncertainty, that's what we talk about. I agree on the long-term positive outlook, but industries have to survive also in the short and mid-term. And what we are facing is extraordinary disruptions. Disruptions in supply chains, disruption in global trade, tariffs, armed conflicts. And what this takes, it's different challenges. It puts pressure on interest rates, as you just mentioned, and just makes business hesitate. So, what can be postponed in terms of important investments will be postponed. At least this is what we see in our industry and the industry we serve. What industry we serve, for those of you who don't know Topsoe so much, we provide technologies and solutions for the production of conventional fuels, clean fuels, and also renewable fuels. Our customers in conventional fuels have been challenged in the last couple of years, but as you can understand, particularly challenged now is with what's happening in the Middle East. Our customers in the energy transition space see a delay in the energy transition. Agree, and I'll come back to that there are pockets of optimism. There are good things happening in EU, Accelerate EU Act. There are good things going on in Germany with more push for domestic production of renewable energy and fuels. There's a lot going on in Asia that it's not so visible from here. China, India, Australia. But as a matter of fact, when we look at our reference markets, we have invested a lot in developing business in Europe and the US, and there's a reason to that. It's slowed down, and it's just going too slow for what is needed. And Topsoe find ourselves, like other companies, in a place where you end up having stranded assets or potential stranded assets. It's the hard reality. I'm a fan of facts. I'm a fan of scenario planning and being nimble, and you have to watch out for what reality holds and just act on that decisively and promptly. And this is where we had to course correct. Monday, we announced a major restructuring, the largest restructuring in the company lifetime, 450 colleagues. We had to announce the hibernation of our Herning plant. So lots of unpleasant news. It's sad, but it's what is needed in this phase. Now, I'm still a believer in the energy transition, but we need to act on what we have. And my main message today is that stability, predictability, free trade is what enables business. And right now, when I look around, I don't see a lot of that. And you just have to live with the facts that are out there. Now, and on a positive note, you always have to have a vision to embrace and to really have followership with the people in the company, and we don't change our course there.
No. It's good to hear that you are optimistic and positive, even though your company is what should we say, in the middle of a geopolitical storm that affects you. Let's see if we can unfold some of that positivity as well during the next couple of minutes. I also want to hear from you, Jesper, a Danish perspective in the US that we talk a lot about. I know what you're up to these days. You're going to a lot of interesting meetings about Greenland. So spill the beans. Let us in on what's happening. What are you doing?
Well, Greenland has been a roller coaster. We all know this. And I have personally spent half of my life, the last 1.5 years, on this issue. I think it's very clear that we have experienced a breach of trust with our most important security ally. We all know this. I also think we could easily spend the whole day talking about the global unraveling of institutional international order, Trump unpredictability, global geopolitical turbulence, and I agree to everything that has been said. But I also would say that from my vantage point in Washington, beneath that layer of all the politics that is certainly creating a lot of work for us and for me, I also see something else. When it comes to the Danish business community, and we can come back to it because there are many different stories underneath this, I actually think that it is still remarkable what is happening in the US, in the American market. I just want to walk back. It's only 5 years back that the US became our largest market for export. In 22, the US became the largest destinations for Danish investments. In 23, the US became the largest investor into Denmark. And in 24, the United States became our largest trading partner overall. Just one data point, which is actually also a very good talking point when I have meetings at the White House and other places. Denmark is now the 16th largest investor into the United States. 16th, that means that you, the Danish business community, invest more into the US than Italy, Brazil, even than China. What I think when we get the final data from 25, because we don't have that yet, is that this incredible surge we have seen over the last 10 years, I think we are going to see a drop in 2025. Simply because there were so many Danish CEOs and senior management who said, all of this unpredictability, what are the framework conditions? We don't know. We'll have to wait with our next investment decision. But then I would also contend that this fog of vagueness, what's happening, is beginning slowly to become more clear. We have a better understanding now of the tariff situation. We begin to understand the framework condition, and I see this very specifically in the number of new investments decisions coming in. So I think that drop that you saw in 25 is beginning to turn. So after this uncertainty, I think there is a new momentum. So I would say, for us, for Denmark, for the Danish business community, the United States of America is still very volatile. It's politically more difficult, but it also remains the single most important market. And these days, I actually think we can come back to why. I actually think that the importance is increasing, not diminishing.
Okay, but I hear all three of you saying that despite challenges and unpredictable climates all around, there's actually some positive notes to rest on. So I think we should move from the big picture to perhaps where this becomes a little more difficult in practice. Roelof, when you see a company adjusting its plans, like for instance, Topsoe did, because the market is moving more slowly than expected, how do investors read that? I mean, is it a warning sign, or is it just Elena being a disciplined leader?
It depends on the perspective and the context, I think. That's why I said that crocodile chart is always helpful to illustrate stuff. If your returns on capital are far above your cost of capital, then you need to grow your business. And I think echoing what was said earlier, I think the US returns on equity are still 19%, and in Europe they're 13%. In the US, we've seen the cost of capital rise a lot more, but the gap is still there. And in Europe, the cost of capital has not gone up a lot. But if your returns on capital are lower and your cost of capital are higher, then you need to do something as a business. And I think that's what investors are looking, because it depends on the context.
Yeah, but what can make investors nervous then? Let me put it that way. I mean, there's lots when you open the news that you could be nervous about, but from an investor's point of view?
I think from an investor point of view, that's taking a bigger picture. I think the global economy is flying on not too many engines. Growth is being incredibly supportive by an AI boom, which is exploding. It's remarkable what's going on. It's an amazing time to be alive. It is. But it is one engine which is driving growth a lot, and there are not that many other engines of growth. So if I just have one data point, in the US, the GDP growth in the first quarter of investments was 18% year on year. On AI investments, it was negative -3% on ex-AI investments. So there are investments, but they're all concentrated in one area, and that makes me somewhat concerned, the economy being too concentrated and the market being too concentrated. And that's what clients are also asking us: how can we diversify? And I think that's the big challenge, and also the big hurdle.
Yeah, Elena, you had to adjust your strategy because the clean hydrogen market is moving slowly, but that's politically driven, a lot of it. What does that tell you about the gap between political ambition and your commercial reality?
Yeah, and I'll maybe start with some facts. Looking at our electrolyzer factory in Herning, here in Denmark, which just came to life in October last year. We took final investment decision in August 2022. I had just joined the company. And at that time, there was a big ambition from the EU, with the Repower EU, to go for 20 million tons green hydrogen. 10 domestically produced, 10 imported. We are sitting in 2026, halfway. Guess how much of that has gone through? Not even 1%. Not 1%. And you already hear the critics that maybe we should review the SAF mandate, sustainable aviation fuel mandates, we should review green hydrogen. And this is where it's fundamental. And when talking about predictability, it's true, you shouldn't base your business on incentives. That's not super wise. But you also need stability, predictability of the policy framework, so that the investment can actually foresee a decent return on capital. And this is not necessarily what we are seeing at the moment. I think this is one of the biggest challenges. If you look and really, I agree with you that you see this big drive of AI on the economy, but when you look at the underlying industry, the manufacturing industry, you don't see the same. We don't see the same. I'll just give you one example. It's public. Exxon in the US had one of the largest fossil-based projects with carbon capture. They shelved it. They don't lack capital. They lack security. So I think this is what we are faced with, and why we are so boring, continuing to ask for firm mandates for security and predictability. Boring business.
Boring is good, I guess. But
I'm a boring Italian. So.
But Jesper, Elena is describing, or I hear her wanting, predictability, stability. From your point of view in the US, how realistic is that?
That's not very realistic. I don't see that we are going to have a lot of predictability and certainty, neither in the political framework, and I'm not even talking about Trump, that's of course a factor here. But I also have to say that, and I think Ronald also described that, that's also the geopolitical reality. We come from a world that we liked, globalization, open markets, and so on. All of this is becoming economically what we like in terms of getting people together, societies, bringing down conflict. That is being securitized. Everything is read into more from a national security lens, which is triggering, look at chips, look at critical minerals, you could go on. But let me just use the question also then to segue, to say, yes, there is less predictability, and I would contend this is going to continue. I will focus now on the United States. This is where I have my focus. And we have industries for whom that's difficult. We just heard one. I could give a couple of other examples. Everybody is aware of what it means for the offshore industry. Obviously, there's not going to be one single new project permitted under the Trump administration. I'm actually pretty pleased that the 5 projects that are under constructions will actually seem to be constructed. That's important for many of the Danish companies. It's not only one, there's a whole supply chains. But what is also interesting, and that comes back to what you just said about the investments in data centers and AI, is that is opening up opportunities. We are, of course, not hyperscalers. I mean, we let the big tech giants do this. But the whole infrastructure around the data centers, and I will let the companies speak for themselves, but we now have created a data center alliance, and I tell you, they are more busy than ever in the United States. Because they do, we have good solutions, technological solutions in Denmark. It's some of the same challenges, local population saying we don't want data centers, it takes too much of the grids and so on. But I think we have something to offer. And we have some of our very prominent Danish companies that are now getting all their foot into this, and that's very exciting. So what I'm trying to say is that there are industries, sectors for whom it's very difficult, and also because of the policy changes, but there are also others who see new opportunities. And that's why we have to be very focused on where are the new doors opening.
So what is your advice for when a company from like the clean energy sector calls you up and say, oh, what should we do in the US? Do you just say stay away or maybe invest in data centers?
Well, it obviously depends on which company it is. But one of the advices I would give right now is that it is always important what comes out of Washington, D.C. Just look at what happened with the big, beautiful bill taking tax credits away. Very important for Topsoe. What you described before, that was part of those incentives being taken out. But because deregulation, meaning taking regulations away, EPA standards and so on, that makes it even more important what the standards are in the individual states. We have always said, remember, the United States is not only what comes out of Washington, D.C., it's 50 states. That statement is right now even more important. There is a huge difference from doing business in California. It always reminds you of a European regulated state. And by the way, the 4th largest economy in the world, having surpassed Japan as a total economy, California alone. And then compared to Florida, where there's basically no regulation. So one of the advices we would give right now is to make even more attention, to pay more attention to local standards, incentives that comes out of the governor's offices, which is also one of the reasons that we have invested more and more in reaching out, making agreements with individual governors.
So Elena, I'm sorry to say, you can hear Jesper saying there's not going to be more predictability, at least not in the US. I'm guessing probably not globally either. Then what? I mean, who should create this stability that you're asking for? Is it Roelof and the markets, or should you find it within yourself, or what?
So we have to find ourselves, our way. That's very clear. And while I would wish, not only for us, but for the markets we serve and for all of us, for stability, I'm very aware this is not coming anytime soon. So I think here is where leadership, which is one of the themes here today, comes in place. I said before, I'm a fact-based person, but facts are changing very quickly nowadays. So you're forced to be nimble, to verify your assumptions almost every day, and work with scenario planning. And then I think for me as a leader, newly established, you're pretty lonely when you're a CEO. But you're not so much if you invite really honest talks and challenges. And I think this is what we as leaders have to look for. Somebody that challenges us, that brings new perspective, different perspective, that actually makes us better in the choices we make, in the scenarios we set out, that puts in front of us the risks and how we can mitigate. So actually, being nimble, work a lot with scenario planning. It's where you find your stability in being stable towards a very changing world. And then we are blessed at Topsoe because our core business is a healthy one. It needed to be brought back to a more profitable base, but we have something to build on. And to be clear, we are in the US. It's our second largest market, and we will continue to be there.
Yeah.
Can I add one
Yes,
comment there? Because you said, well, do you need to look at markets to help with predictability? I think there's one thing, and I think we learned that last year, that markets help to discipline erratic politicians. And I think we saw that last year. And
Which politicians are you thinking about?
Just in general.
Oh, okay.
In general, I'll be. No, I think if there's one thing that you saw last year, and I've compared it with a roller coaster, but the cart stays on track because on the one hand you cannot have interest rates rising too much because we do have a lot of debt out there which needs to be repaid, and on the other hand you can't disrupt supply chains too much because you cannot rebuild supply chains within a week or 2 weeks. So those tensions kind of help put bounds on the irrationality of policymakers.
Yeah, it's sort of a new role for markets, isn't it? Being the stabilizer.
Yeah.
Yeah, but Roelof, when Elena points to leadership as one of the, what should we say, guiding lights for stability, what do you look at when you look at leadership? I mean, when you look across companies globally, who do you think is navigating these erratic times well? I mean, what stands out for you?
I would echo exactly what you said. You need agile and be nimble and be smart. Because I think there's one thing now about this time. Normally, the longer term was pretty predictable and the short term was noise. But now I don't really know how the long term looks like. You can build different scenarios. So I think as a leader, you need to think about different scenarios and how you would act in all these different longer term scenarios. But the shorter term seems to be somewhat more predictable because the cart has to be on track of the roller coaster. So I think that's one thing you need to look at, and the other thing, I think you need to embrace risk because the biggest risk out there is not taking enough risk. The world is changing so fast now. I can't keep track of all the AI developments, but luckily a lot of my colleagues can. And my boss basically tells me, disrupt your own job, because otherwise somebody else will disrupt your job, and I'd rather have the first one.
Yeah.
And I think that's what you need to look at in terms of leaders.
Yeah. Yes, but from where you sit, I mean, from Europe and looking at the US, it looks like just a long list of worries, tariffs and Trump and uncertainty. But from where you sit, what do you think is the biggest challenge for leaders?
Yeah, can I just, the assumption behind your question, which is true, unpredictability, I also said that myself, but if I had more time, and I don't, so I'll just say the conclusion. I actually think that, just to echo what you're saying, guardrails are beginning to come up, also around President Trump and about this. And from the judicial system, from public opinion, Republican Party itself, gradually, international community. And the fact that every day counts. So there are guardrails coming up, and every day that's going to make it a little less unpredictable. I think that's an important point. Then your question. I think that the biggest concern for international business leaders now, I think is increasingly also about talent. Even companies that are performing very well often struggle to expand also because they cannot get access to engineers to AI technicians, highly educated workers. Every time I visit another Danish company in the US, it's not about the tariffs. It's not about what Trump is going to do tomorrow. It is, how do I actually get access to the best qualified people? And I think the smartest companies can do now is also investing heavily in local ecosystems, partnership with universities, technical institutions, research environments, and also think about regional talent pipelines. So I would say that talent is, to some extent, also becoming this battleground for the future. I think it's very important with that manpower and how leadership digs into this underground.
Okay, but if I give you all three 30 seconds each to conclude on leadership for now, what is one thing that you think leaders should start doing differently tomorrow? Jesper, you can begin.
Should we do it differently? I'll pass on that. I have to think about that.
Okay, you can have a minute then, because Elena can have her 30 seconds before.
Of course, and it's not doing something different, it's more. Trust, accountability, integrity. Okay. More of that.
Yeah? Roelof, what do you say?
Make decisions faster under increasing uncertainty.
Okay, do more, do it faster.
Accept risk.
Yeah, okay.
Okay, so if I should come up with one thing, I think that, it is already happening. Public-private linkages have already become closer, but I think it's increasingly important that we understand each other. Companies, how the bureaucracies, how government works, because of everything we've been discussing here, I think that public-private partnership, understanding each other, having dialogues, very important.
Okay, 3 good concrete advice. Thank you for that. I'm going to open up now for questions from the audience. There's already a lot of you who have used the app to post questions. Thank you so much. There are a lot of questions about AI, actually. Roelof, I think it's you who turned up the knot on that. So let's begin on that. Which impact will AI have on the fundamentals around cost of capital?
Easy one for you.
Yeah, no, I think it's an easy one. It's not an easy one, but I think I was reading something yesterday. If you think knowledge, and it comes back to talent earlier, if you think knowledge is important, then I think the price of knowledge from AI goes to zero. So that cost of capital effectively goes to zero. It is about the context or the experience, how you can deal with it, but that's also my own story I tell my boss to keep a job. But I think you need the context, you need the history, you need to be able to connect with people. That is becoming more and more important. So I think AI will lower the cost of capital, it will increase the returns on capital, and it will be massively disruptive. But at the end of the day, I think that's what we learned from the history books. It will be the providers of the picks and shovels, so that's the industrial base, and it will be the users of technology, which are really the beneficiaries. And I think that's, again, a pro-European story.
Yeah, Elena, do you have a view on this? I mean, what will AI mean for Topsoe's cost base?
I need 15 minutes.
No, please don't.
Joking. Agree to what you, and I was just joking that it was an easy one for you. It's an extremely difficult one. On knowledge, I agree. On the ability to make good decisions, I'm not sure that AI brings you there. And I think one thing that we shouldn't forget, AI is not creative. And this is what comes from people in this room and beyond.
Okay. Jesper, there's some questions for you about the US market. There's one of them I really like, because you were speaking first about it still being a very big market for us. The question is, considering the current situation in the US, it could also be seen as a disadvantage that it has become our biggest market, hence increasing our dependency. What's your perspective on that?
Well, that's obviously right. When it's become our largest market, it also creates vulnerabilities. I've already given one excellent example of that, offshore wind. When you have companies that have invested so many $1 billion and they are being, for ideological reasons, I would say, being trying to stop, then it didn't succeed. that obviously gives some concerns for investor sentiments. So in that sense, I agree to the assumption, to the question that there are vulnerabilities. But I then also point out to the fact that when you look at the overall U.S. market, it is still surprisingly resilient. It's robust. I think many European countries would like to have the same GDP growth rates that are still coming out. And if I may just take one point on the technology question.
Yeah, sure.
And link it up to what we are talking about here. I obviously agree that we as Europe have to be much better in technological terms. For that, and we need to invest in our own, we cannot be that dependent. But I also think that facts on the ground is that the United States, and by the way, China, are significantly ahead. And at a time where we are discussing becoming less dependent on China, and especially the United States, what is actually happening because of artificial intelligence is the opposite. Because that is accelerating so fast that we are going to become more dependent on US technology. So I think we need to think about what is our strategy here. I think we need to do it like Denmark has always done. We need to invest in the ecosystem where we have something to offer for Denmark, life science community and so on, that really has something to invest in the AI sector, to attract investments in these areas from the US, like we have done in quantum technologies. I think if we just say we want to play in the Super League, but only play with those in the second divisions, I don't think we are going to catch up. So I say Europe will not succeed by pretending Silicon Valley does not exist.
No. I want to ask you, Roelof, also the dependency question. I know you're from an American business, so it's perhaps a bit ticklish for you. It's a global firm, let's say that. A lot of Danish pension funds, for instance, have also said that they are way too heavily invested in the US. A lot of funds seeking towards Europe instead now.
Yeah.
What should one's dependency be on US markets?
I think that question obviously came up last year as well. And I think just some facts here as well then. I think there are three, disregarding FDI flows, so foreign direct investments, so basically the building, etc. In terms of financial assets, the US equity market is 60% of global equity markets. So a lot of, and the companies are, as I mentioned earlier, returns on equity are really high. So do you really want to have do you want to give up those 19%? I don't think clients were willing to do that. Bond flows a lot of our pension funds here don't own a lot of fixed income in the US. So bond yields have risen a lot last year, but it doesn't really hurt pension funds. It hurts reserve managers, so central bank assets, but pension funds don't hold that much. So there was not a big change there. Neither was there a big change on the equity side. The only thing we have seen, and that's what clients have also done, is, okay, so they say, I want the equity, I don't own the bonds, but I'm getting a bit more concerned about the currency aspect, so I'm taking less dollar risk. So I think that's effectively what we're seeing. So people are diversifying while also acknowledging that the dependency and the concentration is still there, and you cannot fully diversify out of the biggest financial market in the world, because the other financial markets, for all practical purposes, are too small. And I think that's also a card that Europe can play going forward. Saving and investment union, capital market union, that would be great. Because then, if something happens, capital flows into Europe instead of out of Europe.
Good point. We tend to talk a lot about Europe and the US. I think we should also try to squeeze in a little bit in Asia's direction. There's a question for you, Elena, on what the main challenge is in the Power-to-X industry. Is it competition from China with cheap electrolysis and state subsidies?
I personally think that the problem starts with demand. And there's no energy transition. We have seen no energy transition that has happened without actually policy mandates. And I'm sorry to go back to that, because there's no way that the price for a renewable fuel can be as cheap right now as fossil. So What China is doing, interestingly, and we play with China, so we're happy that they're going ahead. What China is doing is they push it through the system in their ways. Yeah? They make sure that companies, though it's not financially attractive, they do electrolyzer, they do green hydrogen until the cost curve comes down. And so that is great. It's not the way that we can do things here in Europe, and that's why we need to do it differently. Okay. But it's great to see that China and India in different ways are plowing through. Yeah.
We squeezed in a little bit of Asia, but I'm afraid that's all we had time for because time is actually up for my great panel here. Thank you very much to Roelof, Elena, and Jesper. Give them a big applause. Thank you, guys.